For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. The majority of technology companies have been struggling under the weight of ongoing supply chain issues, tariff-induced price pressures, and general concerns about an escalating trade war. However, Palantir's business model positions it in stark contrast to these traditional firms. Unlike companies heavily dependent on the movement of physical goods across borders, such as semiconductor manufacturers and hardware producers, Palantir operates within the digital realm. Its services are built entirely on software, delivered through code, rather than through shipments of tangible products. This distinction shields the company from the direct impact of tariffs and logistical slowdowns, allowing it to maintain its momentum while others falter. More importantly, Palantir is not just surviving these macroeconomic headwinds, it may very well thrive because of them. In a world where countries are increasingly embracing protectionist policies, one consequence could be an upswing in defense-related and strategic infrastructure spending. As governments scramble to secure their national interests and build internal resilience, demand for robust, data-driven platforms like Palantir's is likely to increase. These tools are not subject to tariffs because they do not rely on international shipping or physical components. This digital-only model means Palantir is largely immune to tariff hikes, such as the 10% base-level tariffs that have been levied on imported goods, or the even steeper 34% duties targeting imports from China and the 20% tariffs on goods from the European Union. While competitors struggle with increasing input costs and complex import compliance, Palantir remains entirely unaffected by these complications. Revenue generation for Palantir is primarily driven by long-term contracts with both government institutions and major commercial enterprises. These contracts are designed to withstand fluctuations in the global economy, and they are not constrained by the same trade barriers that affect product-based companies. A clear example of Palantir's practical value can be seen in its partnership with BP, one of its prominent commercial clients. As the oil and gas industry prepares for potential shocks arising from new tariffs, such as the aforementioned 20% tariff on equipment sourced from the European Union, BP has turned to Palantir's Foundry platform to mitigate these risks. Foundry consolidates data across the company's refining, shipping, and logistics operations, allowing decision-makers to reroute supply chains or pivot to domestic sourcing with minimal disruption. What might represent a serious setback for other companies becomes for BP a strategic advantage. This ability to convert disruption into opportunity is a key reason why Palantir's offerings are so highly valued. This same dynamic is replicated across Palantir's client base. The company has strategically built its business around mission-critical contracts, which are typically multi-year and deeply embedded in client infrastructure. These agreements provide both revenue stability and long-term growth potential. The ongoing trade war, in fact, may serve as a powerful growth engine for Palantir. As businesses come to terms with the reality of higher duties and the breakdown of traditional supply chains, the need for real-time intelligent data platforms becomes paramount. Palantir's tools enable organizations to adapt swiftly, restructuring their sourcing strategies, forecasting risks, and reallocating resources. This adaptability is not just a benefit, it is increasingly becoming a necessity in today's economy. The commercial segment of Palantir's business is particularly well positioned to capitalize on this moment. Last year, commercial revenue rose by over 54%, largely fueled by the growing demand for artificial intelligence-powered efficiency tools. The current climate of trade tension and economic uncertainty is likely to amplify this trend. As companies grapple with rising costs and the potential for retaliatory measures from global trade partners, they will increasingly turn to solutions that help them extract value from their data and make informed decisions rapidly. In such a scenario, the ability to synthesize fragmented data into clear, actionable intelligence becomes a significant competitive edge. Additionally, Palantir's value proposition extends into the public sector. The renewed emphasis on reshoring production and investing in domestic infrastructure, highlighted by national programs aimed at accelerating manufacturing capacity and securing supply chains, perfectly aligns with Palantir's strengths. Its platforms are built to orchestrate large-scale, complex operations, and they could play a crucial role in these national efforts. Whether it is coordinating the logistics of vaccine distribution or streamlining federal infrastructure initiatives, Palantir's software is already proving its worth. As government priorities continue to shift inward, the need for scalable and agile digital infrastructure will only increase. Yet amid all the bullish sentiment, there remains a key risk: Palantir's valuation. The stock is currently trading at a lofty 46 times projected revenue and 132 times expected earnings for the current year. These metrics place it among the most expensive names in the technology sector, raising concerns about whether the current price is justified, especially if broader economic conditions begin to deteriorate. Even the most optimistic investors must reckon with this valuation and assess whether future growth prospects are robust enough to support such a premium. Despite this, Palantir's performance during the recent market downturn speaks volumes. While many other technology companies have seen their stock prices tumble dramatically, Palantir has experienced only modest declines. This relative strength suggests that investors see the company as a safe harbor, a business less vulnerable to external shocks due to its unique positioning. It may also reflect growing recognition that Palantir's platforms are not merely software tools, but essential infrastructure for the modern world. Wall Street analysts remain divided on Palantir's future. Over the past 3 months, the stock has received 4 buy ratings, 11 hold recommendations, and 4 sell ratings. This mixed outlook translates into a consensus hold rating. The average analyst price target currently sits at $92 per share, indicating a potential upside of approximately 18% over the next 12 months. While not overwhelmingly bullish, this suggests cautious optimism about the company's prospects moving forward. Palantir's path through the ongoing tariff and trade policy storm offers a compelling case study in strategic resilience. Its immunity to global trade disruptions, combined with surging demand for data-driven decision-making, places it in a strong position to continue growing, even in a challenging environment. Although its elevated valuation warrants careful monitoring, the company's consistent performance during market turbulence and its growing relevance across both the commercial and public sectors cannot be ignored. As the world moves further into an era defined by geopolitical complexity, shifting supply chains, and technological transformation, Palantir's role as a provider of clarity and agility becomes even more vital. The company is not simply reacting to the present, it is shaping the future. For investors looking for exposure to a technology firm that is not only surviving the chaos, but potentially thriving in it, Palantir remains a name worth watching closely. In the end, Palantir Technologies has emerged as a standout in a turbulent market, shaken by President Donald Trump's sweeping tariffs thanks to its software-driven model that shields it from trade-related disruptions affecting most tech companies. With digital platforms like Gotham and Foundry, Palantir benefits from long-term contracts with government and commercial clients, allowing it to thrive as businesses and nations face rising supply chain risks and tariff pressures. Its tools help organizations adapt swiftly by centralizing fragmented data and enabling real-time decision-making, positioning Palantir as a critical asset in both the public and private sectors. While the company's steep valuation, trading at 46 times revenue and 132 times earnings, raises concerns, its consistent resilience and strategic importance suggest strong growth potential as global economic uncertainty persists. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.